when you talk about your exposure to loss, okay, you're talking about, property damage situations. You have the trees that haven't been maintained properly. So now all of a sudden you have a tree branch falling on top of my car. You have the roof that hasn't been maintained, and you have a roof leaking, and all of a sudden it destroys my $5,000 painting that I bought for $100. And so these are the issues that failure to maintain hits us with.
HOA Insights, common sense for common areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Hi, I'm Robert Nordland from Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services, and this is Common Sense
for Common Areas. Well, welcome to episode 19, where we'll be discussing how your type of association affects the kind of exposures and potential losses facing your association. Insurance is complicated. It has a very specific purpose to protect you from very specific losses. So this discussion today will help you know what insurance says for your particular type of association and how your insurance should be different from a different type of association down the street. While I believe this is going to be a great conversation, the numbers continue to tell us that our Board Hero episodes, like last week's episode 18, continue to be our most popular. So if you missed it, take a few moments to catch up with that episode and subscribe to the podcast from your favorite podcast platform. And before we get started, I want to remind you that if you have a hot topic, crazy story, or a question you'd like to have us address, you can contact us at 805-203-3130 or email us at podcast@reservestudy.com. And one of those questions came in about insurance, and I'm hoping Kevin can use it to kick off our discussion today. Sherry from Boise asked, how do we know our insurance policy is covering all the right risks for our small, newer, 24-unit lakefront townhome property? And I bet that's a pretty place in Boise, Idaho. So, Kevin, how might lakefront townhomes insurance needs be different from a downtown mid-rise or high-rise?
Sure. And it's a great question, and I love questions about insurance because that's what I do, and I specialize in it. But my goal is always to make it so that it makes sense to everybody. And when you talk about insurance is complicated. However, when you talk about community association living, there's so many different variations of it, from being in a townhome, from a condominium high-rise, to a co-op, to a HOA, homeowner association, maybe out in Orange County. And when we talk about, we can break it down to something simple. I live in a single-family home in Los Angeles. In it, I have a pool, I have a garage, I have a gate out in the front, I have plants around for my privacy, and I'm responsible for the whole entire thing. I'm responsible for the roofs, I'm responsible for the garage, I'm responsible for the pool. If any cracks in the pool, I got to take care of it. I'm happy. My job is to maintain it, protect it, and enhance it so to increase the value of my individual home. If there's a problem with it, if I'm not maintaining it correctly, if I'm not protecting it, if I have smoke detectors and maybe burglar alarms in there, okay, and something can happen, I'm not enhancing it, guess who gets mad at me? My wife.
Of course.
Okay? I have to maintain it, protect it, and enhance it all the time because it keeps my wife happy. And that's our job, right, Robert? Keep our wives happy, right?
It's so much, it's first thing every day.
Okay. Now, here's the problem when it comes to community associations. Now I've taken my life and says, you know what? Living is too complicated for me. I'm going to move into a HOA. Now, HOA, I still have to worry about the roofs. I still have to worry about maybe the pool, if that's my own pool. But guess what? There's certain common areas I may have to worry about anymore. I don't have to worry about the gate anymore. I don't have to worry about the privacy trees anymore because now they're in common area. So before I had 8 responsibilities, now I have 5. So I have to worry about it as much. Now, all of a sudden, I say, okay, I'm older now, so time to retire. I'm going to live in a condominium association. Okay? And now guess what? I worry about it even less. I don't worry about roof anymore. I don't worry about the garage anymore. I don't worry about the pool. All I have to worry about was the inside my unit. I don't worry about anything but the inside of my unit, from the studs in, from the drywall in. That's my responsibility. And I don't care what happens outside. Somebody can slip and fall in front of my steps, in front of my unit there. Not my responsibility. It's my responsibility. Now, I live in a co-op. It goes one step even further, because a co-op is responsible for all of it. I don't have responsibility because a co-op, I don't own anything but shares in a co-op. So for me as a unit owner, my job is to reduce my exposure. Okay, so every time I move, my exposure is reduced. So therefore, I need less insurance or less headaches and less worries. So what makes complicated situations for community associations is that the more exposure the association takes on, which means the board of directors, the more insurance they have to have.
Well, you've been talking about you as a person. You have more exposure in HOA because you have more stuff. You have less exposure. You personally, Kevin, have less exposure in a condo and even less exposure in a co-op. But that doesn't mean the exposure goes away. It just means that someone else is responsible for it, and that's the board member, and that's who we're talking to today.
Exactly. So I transferred my responsibilities to the board of directors of a condominium. And that's the key thing. That's what I want to do. As a unit owner, as an owner, a homeowner, what we want to do is protect, enhance, and maintain it. But what we do is we buy insurance and we do our own protection. Now what we want to do is to hold someone else responsible. So what I'm doing now is holding the board of directors responsible for the things I don't want to be responsible for anymore. And that's what makes insurance challenging for community associations. Because no matter what, if you live in an HOA, a condo, or a co-op, the board of directors now has increased their exposure to loss. In terms of property loss, if there's a fire, if there's water damage coming down from a unit, that's their responsibility. If it's a co-op, it's more their responsibility because they own the entire building. So when we talk about insurance, we're talking about insurance protecting the individuals, the board of directors, in case there's a loss because they fail to maintain, protect, or enhance the community association. That's everything boils down to those three things.
Okay, because the risks are there. There is a roof. Someone is responsible for the roof, the hallways, the tennis courts, the pool, the lakefront for this place in Boise. Maybe they have a dock on the lakefront, and maybe they have a common area, kayak or canoe or something like that, or boat storage. All the stuff is there. And the big question, it sounds like, is that dividing line between common area and private space and ownership. Yeah, who owns and is responsible for that? And that if you're a unit owner, you're effectively delegating that responsibility to the board of directors, and it's on their shoulders to make sure everything's taken care of. And they've got to customize it for their association.
Exactly. And the difference is here. If my wife gets mad at me, I'm not going to lose millions and millions of dollars. I will fix it. Depends how mad she gets.
Yeah, it depends how mad she gets. We've heard some very messy divorces in the news, but we're not going there.
That's true. But it does mean the same thing, though. We're talking about if my wife gets mad because I did not maintain, I didn't protect, I didn't enhance it properly. Yes, now all of a sudden there's consequences for the actions, and that's what we're talking about. When you go back to that one single home association with a lakefront property there. If all of a sudden the board of directors failed to maintain the lake and they had to dredge the lake because they failed to maintain it, guess what happens now? That means a special assessment for everybody in that association. Now, people who live away from that association, guess what they're going to say? Wait a minute. I don't have lakefront property. I'm not going to pay that special assessment. It's not even fair. We should teeter it so that people who live on the lake has this much special assessment and the other ones have this much special assessment. And so now the debate comes in. Now, all of a sudden is that nobody's happy and the lawsuits start coming in because the special assessment that's unfair and unreasonable and, unenforceable. And now all of a sudden the board of directors sitting there and saying, okay, what happens now? Now all of a sudden they have a liability exposure. That's when they need liability insurance. Overall, what we're going to be talking about today, Robert, because the most important coverage they're going to have is liability. Liability is that I transfer all my responsibilities to the board of directors living in a condo, a co-op, or whatever. And now I'm holding them responsible as opposed to my wife holding me responsible. My wife says, "You get mad at me because I'm living in front of a lake and that lake is destroyed because they didn't maintain it right." But guess what my wife and I are going to do? We're going after that board president because the board president failed to maintain the lake.
Right. So being a board member is it's a serious deal. It's not just you thought you'd volunteer a little bit of time, give back to the community. You have some very serious and significant responsibilities, and you got to make sure that the assets of the corporation, and the three words you used was maintain, protect, and enhance. And I like that. I'm thinking about just the small things, maintaining. That might be trimming the trees away from the roof, and might be fixing that leaking outdoor spigot so it's not creating a slippery trip and fall hazard. It may be maintaining the docks or the waterfront. So it is an enjoyable process. And once you're not doing those kinds of things, then all of a sudden, that's, in my mind, it becomes a trigger element where it starts triggering a lot of bad things to happen. Discontent, property values aren't maximized, concern for the board meetings get long and contentious. So many bad things begin to happen when you're not addressing the board leadership and those things that we're talking about here in this insurance question. What is the board responsible for?
Yeah, and that's the key thing, is that they are responsible for the common area. They have to maintain. Maintenance is their number one responsibility. Now, they also have to enforce the documents, okay? They have to collect assessments, but the key thing is maintenance. And the problem with insurance is that people think that just because there is damage done, insurance is going to pay for it. Insurance is not a maintenance contract. It's not a maintenance contract. So if all of a sudden I'm upset because the lake needs to be dredged, okay, because they didn't maintain it properly. The docks haven't been maintained, so they're starting to rot. They're starting to see wear and tear all over the associations, and the board is being sued. The board is being sued on their directors and officer liability insurance, the general liability insurance, any liability. They're being sued. The problem is that covered? You have maintenance issues, wear and tear is excluded under most liability policies. If the board is sued because they failed to maintain the lake, if they sue under general liability because the general liability is property damage, but there's no wear and tear.
Right. When in my words, insurance is for accidents, not normal life. Normal life, you're responsible for normal life. You're responsible for putting oil in your car. You're responsible for balancing your wheels so your car doesn't veer off the road, things like that. You're personally responsible. Well, you and I and the families that we care for, we're responsible to make that happen. Insurance is for when someone blindsides you, and that's a surprise.
Exactly. Or somebody falls into that lake and drowns. Oh, I can't believe it. Yeah. So and that's what we're talking about. Now, you can blame the board because the board did not do their job properly, but now you're talking about a tough area for insurers that come in and say it. We go back to Surfside, okay? Surfside, what made a difference is the building, boom, came down, okay? All of a sudden, wow, that's an occurrence that happened. We saw the damage. Damage was occurred by the building. Now, if the building never came down and somebody came and said, look at all the wear and tear, look at all the structural damage, and it's taken place over a series of years, that is just your responsibility to maintain. It's not the insurance company's responsibility to take care of it.
Right. Well, they were in the process of a major special assessment at that time, weren't they?
Yes, they were. Yes.
Okay. Because they realized it's our building, it's our problem, and I'm not sure if they just, I don't know enough details, but they were embracing that it was their building that was aging and deteriorating, and then they tragically ran out of time to get all those things fixed up. But it is that, as you speak about, the board's understanding of common area, and that's where you get an attorney to help if you have any gray area uncertainty. And then the board has to say, okay, how are we ready for these things that can happen? And I think I use the word exposure, you use the word risk.
Yes.
What are the things that can happen? What's unique to our association?
And that's it. When you talk about your exposure to loss, okay, you're talking about, property damage situations. You have the trees that haven't been maintained properly. So now all of a sudden you have a tree branch falling on top of my roof that hasn't been maintained. And you have a roof leaking, and all of a sudden it destroys my $5,000 painting that I bought for, $100. Now all of a sudden. And so these are the issues that failure to maintain hits us with. And it hits us with so strong that what we do is that we look at water damage. Water damage has been the number one problem in community associations forever, when they leak from one unit to another unit to another unit to another unit. So what we do from an insurance point of view is that we put a higher deductible on there. And we will put certain types of exclusion in because we know that it's your job to do a better job of maintaining. So if you do a better job of maintaining, we'll lower the deductible. We won't put a higher one on them. So from an insurer's point of view, we want to limit our loss also. So if you maintain and you do a good job, guess what happens? You limit your exposure. Another area let's talk about is protection. We say maintain, protect, and enhance. When we talk about protection, I have, alarm systems around my house. I got smoke detectors in my house. You have associations, and some associations have more security than other associations. But if there's a loss, okay, the first thing the person going to say, if there's been a burglary, robbery in the association, or a fire or fire in the common areas, okay, and they have adequate smoke detectors, they don't have adequate, what happens is that, again, it ends up being a more dangerous loss, a more costly loss to the association. They have to take responsibility. And again, it goes back to us when we do our underwriting and say, do we want to insure this building? We look at the whole fire safety list of things they do to make sure they have the things they should have. Make sure they have the right doors, make sure they have self-locking gates. We do the maintenance work for them to make sure they maintain. And we have loss control people come out there and say, guess what? That gate is not self-locking. You got to make sure you do it. So from an insurance point of view, we help them by giving them recommendations. And you, as a reserve specialist, you help them out also. It comes into play where they don't listen to you as a reserve specialist or listen to me as an insurance specialist. And we get back recommendations. They come back and say, we're going to do it eventually. We're going to do it. Then we have to come back and say, guess what? We don't want to insure this entity any longer because they're not maintaining properly, not protecting their asset the way they should. And because you said it before, if you don't maintain it, if you don't, it's a deterioration that happens where you see it's a progression where, okay, I'm not going to, trim the trees. Okay. Well, I see some of the garages are not, up to snuff. I see cracks starting to form, but they're cosmetic. It's not a big deal. Right. And then it goes down this vicious cycle to the point where you walk into a place and say, wow, what happened here? If you have a theory, if you have a plan that says we're going to maintain it, guess what happens? Me as an insurer says, I want to write your association. And guess what? You'll probably get a discount because we're looking at it and seeing you're maintaining it properly. You're protecting it. We're doing all things necessary for you to have a quality association, and the values will go up. People want to live there. Hi, I'm Kevin Davis, the president of Kevin Davis Insurance Services. Our experienced team of underwriters will help you when you get that declination. We provide the voice of reason, someone who will stand by you. Our underwriters bring years of knowledge to our clients that can't be automated by technology or driven by price. As a proud ambulance company, we bring true value to your community association clients. We are your community association insurance experts.
One thing I like to hear is that there's things you can do. We hear a lot in the news about how difficult insurance is to place, how expensive insurance is. But Kevin, the words that you just mentioned, those were magic. To remind everyone, their role, from the reserve site point of view, we see things as, for years we've seen these just as a reserve site. How can we help the association get ready for a new roof or new asphalt or new painting or the big projects? And now we're seeing it more that it's interrelated with the maintenance. When you're doing a good job with maintenance, then your major components are going to last longer. And that's going to have a net lower cost to the association. And so it's all involved in different things together. And there's a problem that we see among boards, and it's called familiarity blindness. When they see everything every day, they no longer see it. If you are walking from your car to the mailbox area to your front door, and I bet you couldn't tell me how many cracks there are and uneven areas in the sidewalk, because you know where they are, and that's why you walk to the right of the sidewalk, because the cracks are on the left. There's that familiarity blindness. And so there's that idea. You talked about a loss prevention specialist. It could be a reserve study provider, someone else to walk the property with fresh eyes to help you see what are the risks at your association. What can you do better? We hear a lot in California about fire insurance. What can we do? And if I would imagine, you're the insurance guy, not me, but if I have a plan and I say we trim our hillsides around our property 50 or 100 feet away, I don't know what the magic number is, that's going to make you as an insurance provider much more comfortable, right?
Yes, and that's the key thing. You talk about your reserve study. If I get an application that says we get a reserve study, all of a sudden I say, okay, they are aware of their responsibilities and they are making an effort to do certain things. If I look at their application and they're saying they're maintaining their property, all of a sudden, and I go out there and inspect it and see it, all of a sudden they're golden. They're the kind of association that we're going to look for. And again, what happens is if you're not, you're looking at higher deductibles for water damage or certain types of losses that we know we're going to see quite frequently. We're going to put high deductibles on there and say, guess what? You're going to participate in that loss yourself. It's going to come out of your own pocket, okay, until you fix it or recognize the fact that you have a responsibility to maintain it, to protect it, and to enhance the community.
I like that balance when we talked about at the very beginning, board members have that responsibility, but they also have the opportunity to participate, and they can fix that leaky spigot that's dripping onto the pool deck and making a slippery spot. They can take good care of the entry gate to minimize their access and security concerns. All these things. I love seeing that there's board member participation, not just board member responsibility. And I think you used the word earlier, board member liability. Those are scary things, but board member participation, I love that, where we're empowering the boards all the way across the country to participate and make their association a little bit better, a little more safer, a little more secure, a little more desirable place to live. I'm not sure if we talked about one aspect of that original question where that person from the Lakefront Association asked, how can we be sure that all our risks are covered? Does that mean walking the property with the insurance agent or a loss prevention specialist? How does that board member make sure that their risks are covered?
First of all, if you're a board of directors, you need to know a list of all the things you are concerned about if something goes wrong, okay? So all the things you named in terms of the docks, in terms of the lake, make a list. These are all the things that I'm concerned about. And then ask, are there anything more? I mean, if you have a list, I know you live in a home right now. I live in a home. I know exactly. I have a list of all the things that can go wrong. I know my roof has to be maintained. I know right now my garage door, I need to look at because it goes up slow.
Yeah.
I know my pool water's going down lower than it should. I got to check for cracks. I mean, we know instinctively all the exposures that we have. That lady who lived in that lakefront knows the kind of exposure. Keep track of all those exposures. And when you go to your insurance agent, say, these are my concerns. These are my 10, 15, 20 concerns that I have. Can we be insured for them if there's a loss? Okay? If there's a loss, if there's damage to it, if I get sued for it.
Right. And what can I do? What is my responsibility? What is my opportunity to make you feel comfortable with my risk? Can I show you a maintenance plan? Can I show you my list of the vendors that take good care of our association?
Exactly.
Again, I'm looking for that combination.
Those are the things. The more information I get, the more I can go to my insurance provider and say, guess what? This is a association. I want to give them the best coverage with all the credits there, as opposed to, again, most associations we get at are not that sophisticated, not that knowledgeable, okay? And as a result, what happens is their rates are a little higher than they need to be because they don't take that little extra effort to just have a maintenance schedule. This is what we're doing on a regular basis. We're taking care of our property. If you say that, then all of a sudden, from an insurance point of view, that's the kind of account that I want to write.
Kevin, I love that. And looking at the clock, I think that's a great place to stop. So we talked about participation. There's a responsibility, but also the board members' ability to participate in taking good care of the association. And then the 3 words, maintain, protect, and enhance. What am I doing to take care of it, to protect it, and to not only take care of it this year, but be ready for the future, the next board of directors that we're going to hand it over to. And then making sure I'm getting maximized value when it's my turn to sell. Absolutely fantastic stuff. Well, this is all great help. You talked about understanding the customization aspect. What are the risks at our association? Now, in a future episode, I'd love to go down the path of hearing you talk about what you think and how you think insurance is changing, how insurance is evolving, and other larger trends in our industry. Talk about where we are going. I think that would be a fascinating discussion. Well, we want to make sure all our board members here are prepared for all the changes in the world and the things that are ahead of them. So again, make sure you've subscribed on your favorite podcast platform in order to catch all upcoming episodes. Well, we hope you've learned something from our discussion today that helps bring common sense to your common areas. If you have a topic you'd like to have us address, a story that you'd like to tell, or questions that you'd like us to answer, please call us at 805-203-3130 or email us at podcast@reservestudy.com. You can also go to the podcast homepage at www.commonareas.org. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing you can do is to engage in the conversation. Email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.